Welcome to the Silent Trading channel. Today I'll be updating with you guys on the gold chart to see whether the price right now has created a bullish price action yet or not, right? So as you can see on the 4-hour time frame or the 4-hour candle, but please, before we start, please subscribe, like, comment and share if you like this video, and to give me support in my trading journal, in my guiding you guys on how I trade based on price action and human psychology, right? So first thing first, we'll start with the 4-hour time frame. At the 4-hour candle, all we can see at the 4-hour candle first is as I have told you from yesterday, that buy limits will be placed as a few specific zone to be able to capture the best possible position, right? The buy limits that I've told you to place is over here, right? And as you can see, the price did a dump down, right? A dump down and break what? Break support, right? And after breaking support, there is another dump downwards, right? Another dump downwards over here. And the dump down is to push past support, right? Below wick, creating a new low, but not touching the next support, and then start to pull back. And this pullback indicates unwillingness of the price, unwillingness of the market to break another support, because once the market has dumped down far enough, there will start to be people selling, right? People will start selling either by panic selling or waiting for the price to retrace and then selling. But as I've told you, I don't play on the lower on too low of a time frame, because too low of a time frame, sometimes you can go against the trend on a higher time frame, right? So my preferred choice would be at least the 4-hour time frame. If the least I can go is the 1-hour time frame, and not lesser than that, because lower than that means if you didn't do a top-down analysis, a detailed analysis from the top to the bottom enough, you will have more chances of going against the trend in the higher time frame, which means by playing in too low of a time frame will cause you to go against the higher time frame trend, and will cause you to go into drawdown instead of profiting, right? So my preferred choice would be the H4 or the H1, right? The 1-hour or the 4-hour time frame at the least, because most of the time the trend is strong on the 4-hour and the 1-hour time frame, because if you're gonna be looking at the daily time frame, it will be too long of each candle to watch and to enter a position. So the best one will be the 4-hour and the 1-hour, because it will be in the perfect middle between the higher time frame and the lower time frame, and you will have more chances of entering a position, or more chances of entering I don't call it a perfect position, but I can call it a high quality position, because by entering on the time frame that is in the perfect middle of all time frame, you have more chances of playing on the right trend, you have more chances of playing on the right price action, right? Rather than playing on the lower time frame, and then you might enter on the right price action on the lower time frame, but you could be going against the trend on the higher time frame. So that is why I don't use the lower time frame like M15, M5 to play, because the 5-minute time frame, the 15-minute time frame will be too low of a time frame to enter a trade. And if you're not detailed enough in your analysis, the next thing you're going to be doing is you're going to be going against the trend in the 1-hour, 4-hour time frame. So that is why I don't play on the lower time frame, right? And right now, as you can see, price has dumped down, right? Dump and then pull back, right? And this pullback is where I need the price to be, because you know why I draw this triangle over here? This triangle is actually the same. I'll call it in the same category as premium and discount, right? It is kind of same category as the Fibonacci, because the Fibonacci, you draw a Fibonacci from the low to high, right? To see if the price is going to into a discount zone before you start buying, right? But my version of it is I don't use Fibonacci, but I use what? I use Gann box to draw a price from the high to low or the low to high, and then I determine where the triangular shape would be and where the middle of the triangular shape would be, because price always goes to the middle spot, or what I'll call it the magnet, right? The magnet of the middle triangle. The middle spot, the middle triangle is always where the price, if the price is not looking to go on a trend soon, price will always come back to the middle, right? No matter how hard it push down, it will still come back to the middle. No matter how hard it push up, it will still come back to the middle if it is not going on a big trend. So if the price is not going on a big trend, the price will always go up and then come down to the middle, go down and then come back to the middle, because this is what I call a balance zone, right? For those of you who use a Fibonacci, it is a premium discount zone, but I use this as a balance zone because this is where price are most likely to come back to after hitting a high and then creating a low and then creating a triangular shape, right? A triangular spot. And the balance zone is where the price is always coming back to. It is in the middle of the high and the low, right? If your Fibonacci is drawn here, it will also be at about the 50% or the 62.5.7%, right? Or the golden zone, you call it. So there will always be a way of trading the market, no matter how you look at it, because market always has a way of tricking you into entering a position, right? So my way of entering a position is this way, because I believe market always come back to the balance zone, right? So when I enter a trade, I'll enter a trade at the top of the triangular shape, and I'll enter a long position or buy position at the bottom of the triangular shape, because I believe if the market is not going on a trend, it will always come back to the balance zone, right? So the balance zone is where I'm gonna be taking my profit forever, as long as it doesn't create a big trend. If the price is not going on a big trend, if the price is not going to break out above and destroy and eliminate all resistance or eliminate all support, I will see this as a zone for me to enter a trade, creating a high, but not pushing past this zone. I'll start enter a sell position, or creating a low but not pushing past this zone. I'll enter a buy position and wait for the price to come back to the balance zone. And if the price doesn't come back to the balance zone, I will have to find a way to manage or get another position to be able to close my position above at break even or at the least loss possible, right? So this is another thing I'll be guiding you guys on. I'll be revealing more information and knowledge on this way of trading, because it could be a little bit similar to the Fibonacci, but it is a whole lot different, because the Fibonacci is based on numbers, it's based on premium discount. But this way of trading, it isn't based on premium discount, it is based on the zone where price, right, or I'll call it the hidden support and resistance, because this balance zone is a hidden support and resistance, and price always come back to this zone, either coming back to break or coming back to only touch and then pull back. You can do both, and you can always do everything around this zone. It can sideways over here, it can push past, it can push past and then pull back, right? You can do everything over here, because price always tends to do something, which means we need to be able to understand the price action behind every action the price movement is showing before we can enter a trade. And this is my way of knowing what the price is doing, and I enter a trade based on my understanding of the chart, based on my understanding of my drawing, right? I have drawn this before everything happens, and as you can see, price create a high, right, and not going past this drawing, not going past this triangular shape, and then pulling back and then dropping down and then push down, not pushing past this triangular shape and not pushing past key support and then pulling back up. This is a way of knowing that the price always has a way of coming back and going down, right? So this is all for today. Please be safe in trading, trade as safe as possible, use less risk possible if possible, right? But for today, I'll believe the price action right now is in the buy side. And I'll add on a bit. Right now, price action is in the buy side because this place has created a bullish price action, right? And this candle and the 4-hour candle at a 4-hour time frame has pushed down, clearing off buy volume before pulling back up. What we want is this candle to push up and close above this previous candle wick. If this candle is able to close above this previous candle wick, the next candle bottom wick, it is where we'll buy, right? The next candle bottom wick creation is where we'll buy, and that is how we're going to be enter a trade based on real price action. Because right now it'll be too late to enter a trade because this candle over here has already created a bottom wick. It will be too late right now to enter a trade because entering a trade right now is what we call a panic buying or a follow buying, and we don't want that to happen. Because if you're panic buying and the price start going down again and then touch support once more and then push down further, you'll be in too much of a risk because price can go below this week if the price drop down once more, right? Which means we know that price tends to do something every time, and we don't follow the price too much. We only follow what the price is showing us. If the price is creating a bullish price action, the next candle bottom wick creation is where we'll buy and wait for the price to pull back and then push up. If the price can push up and close above previous candle wick or previous candle resistance, then we know that our buy position or our long position is safe. But if not, and the price push up and then start pulling back, we know that our buy position is not safe anymore, and we may choose to close it as soon as possible, right? So right now we wait for the price to show certain price action before we buy, which means we need this 4-hour candle to close above this candle wick, and the next candle bottom wick creation is where we'll start buying, right? So that is all for today that I'm gonna be analyzing for you guys. So please be safe, please use less risk as possible, right? Perfect trade doesn't mean risking more. Sometimes risking less can also be a perfect trade also. You don't need to risk too much to profit a lot. You sometimes can risk little to profit a lot because you need to be able to understand. If you understand the chart, you can profit more by risking less. But if you do not understand the chart, you'll only be risking more to profit more or risking more to profit less, right? So try to understand as much price action as possible for you to be able to benefit from all of this price action trading that I'm showing you guys. And I'll be building up foundation for you guys because I'll be teaching you guys the basic first and slowly level up level by level until you guys can understand more and more, and then I'll step up my game, I'll speed up my game and show you guys what are the advanced trading techniques I use to be able to enter a position fast and close it fast, right? You can call it scalping, but I'll say enter a position fast by reasoning, and then closing a position fast also by reasoning, right? It is also called scalping, but scalping by really understanding the trade that you're doing, right? So for today, that's all I'm gonna be saying, and stay tuned to my videos tomorrow. So see ya.